Understanding supply and demand is essential for successful trading. That's why, as a trader, you need to know how to utilize supply and demand in order to help you take more accurate trades and increase your win rate. And in this video, I will show you exactly what is supply and demand, how to identify supply and demand, and how to trade them. So, what is supply and demand? Simply said, it's a strong selling and a strong buying. Basically, what makes the price move this way are big institutions making the market move to their favor, down for sellers and up for buyers, causing the price to have such a huge momentum and volume at the time. And basically, trading supply and demand is trading with the direction of the momentum and trading the direction of the big institution, because you don't want to trade against them, or you might end up taking some losses that day. Unless you have a capital as big as the institution, then you're good. You should be good to trade and make the market move your way. So, how to identify supply and demand zones? One way is to find 3 or more momentum candles that will indicate that there is enough volume for you to have your interest, or for you to actually draw a zone of interest. And let's try to find an example for supply. We can see that we have some momentum right here, some candles going downwards, indicate that we got a momentum going on. So now we can draw our supply zone. How to draw it? You want to actually identify where the move started, so that previous candle before the momentum. Draw from the wick to the body in that case, and push it all the way to the right. So this one is going to be our supply zone. I marked it that way. Put it as and this is our supply zone right here. And how it works is like we have the supply zone already identified, and all we got to do is basically wait for the retest, and as soon as you get around this area, you see a push downward, which is going to confirm that it's a pretty good supply zone. And another example for the demand zone, we have basically this big push right here, indicate that there's momentum and liquidity right here. So you want to draw our supply box, identify where the move started, and in that case, it's this one. Draw from the wick and draw our demand box like that. And this is our demand right here. And here we have our demand zone. So as you can see, the price came right back down to the demand zone. We got a couple of weeks and then push right back up. And also another case is when there is a consolidation, meaning that the price is not really going anywhere. There's not really any direction for the price, such as that. Let me mark it up. Such as that, meaning the price is not really going anywhere and just bouncing up and down or in the box. And all you want to do is wait for the breakout of the zone. Like right here, we had a breakout, went up and retested the zone, and then bounce off that zone. So how to trade supply and demand? Now that you already know how to identify supply and demand zones, all you have to do basically in most of the case is wait for the retest of the zone, and then after that only you can wait for confirmation, such as engulfing. And in that case, a good confirmation that we had is this bearish engulfing. Place the stop loss right here. That would be a good entry point at that engulfing candle. Place a take profit at the previous low right here, and going for a 1 to 2 at least risk reward ratio, so you can make like a pretty good amount of profit. And for a standard lot in that trade, that means you're risking 190 and can possibly make $390. That was an example of how to trade a supply. And another example on how to trade a demand zone, basically the same thing. Basically just wait for the retest of the zone, which occurs most of the times, and wait for an engulfing candle. And in that case, Here is our engulfing candle right here. Put the stop loss basically below that candle, since it's a pretty big candle, or below the box, depending on what you want to aim for, and go for 1 to 2 risk reward ratio at least, like I said. And this one took a little bit longer, but sometimes you just gotta wait and be patient, because that's how trading is. And for one standard lot, you meaning you're risking $140 in order to make $290 basically. Then the last example for a consolidation, how to trade a consolidation, is like I say, you want to wait for the breakout of the zone, and then wait for the retest. Then wait for the retest and see an engulfing candle, and in that case we have an engulfing happening right here. Put the stop loss right below the wick of the candle, and go for 1 to 2 risk reward ratio. Basically, in that case, I will usually go for 1 to 2 risk reward ratio. That's only if I don't see any visible resistance zone that I can identify. But if I see one, I will aim for the wick of the candle right here, which will basically put me at a 1 to 2.75 risk reward ratio, which means on a one standard lot, I'm risking $170 to make, in order to make $480. So that's how I personally trade supply and demand zone. And if you think that video was helpful, just go ahead and hit the subscribe button so you can see more of those when I upload my next video. And don't forget to like and drop a comment if you have any question, and I will be more than happy to reply to you or even make a video about it. And I'll see you in the next video.